We are going to start subject of costing. In costing, there is one interesting chapter which is marginal costing. Which will be our first chapter for learning. Write down heading marginal costing. We are understanding first some basic points. First is the selling price. So let us take one business and understand each and every point. Suppose we are in a business of Pani Puri. It is estimated that we will be selling 10,000 dishes of Pani Puri per annum. This is what is our estimate. What we sell, what is our selling price per dish or per unit is rupees 10. Now we are going to sell dishes of Pani Puri. Try to understand, we are going to sell 10,000 dishes at the rate of rupees 10. So it will be 1 lakh rupees. We are going to incur some cost. First cost, variable cost. The cost which is dependent upon this number of dishes. If number of dishes will be manufactured more, we will be having more cost. If number of dishes will be manufactured less, we will be having less cost. A cost which is dependent upon output is nothing but variable cost. If it increases, output increases, variable cost increases, output decreases, variable cost decreases. What will be variable cost in our business? In our business, variable cost will be potatoes, right? If we want to manufacture more dishes, we'll have to purchase more potatoes. Pani, cotton. Can any other student help me? Variable cost. Chana? Basically raw materials. Raw materials will be my variable cost. No other cost will be variable cost except raw material as far as my business is concerned. So I estimate that per annum this raw material cost is going to be 40,000 rupees. This is per annum. This is what is my estimate. At what level of activity? At 10,000 units production. This is dishes. 10,000 dishes of production, my variable cost is going to be 40,000 per annum. So my variable cost per unit is rupees 4. How 4? 40,000 rupees divided by, it is for 10,000 units or dishes. It is rupees. This is variable cost per unit. Let us try to understand some fixed cost. So we are not having a shop of Pani Puri. We are having a lorry of Pani Puri. So the fixed cost will be lorry, which is 20,000. Tape recorder, other fixed assets which are installed in my lorry, and depreciation of which is nothing but 10,000. And this costs are also per annum. So we might have taken lorry on rent, and the rent per annum is 20,000 rupees. What is the total fixed cost is? 30,000 rupees. Sir, what is fixed cost? this remains the same irrespective of your production. So this fixed cost is not dependent on this 10,000 units. Whether you sell 5,000 units, whether you manufacture and sell 5 units, whether you manufacture and sell nothing, this is going to happen. So this is known as fixed cost, and fixed cost is 30,000. Now please try to understand. I am trying to draw a marginal costing profitability statement which starts with sales. At a level of 10,000 units, what will be my sales? Rupees 1 lakh minus variable cost. What is total variable cost? 40,000 rupees. Sales minus variable cost is termed as a contribution. Why contribution? Because sir, fixed cost is yet to be deducted. So we cannot term it as profit. Profit is the sales minus all cost is profit. So we term it as contribution. 60,000 minus fixed cost, in our case 30,000, and so my profit, this is actually operating profit, EBIT, is 30,000. This profitability statement whereby we find out contribution is known as marginal costing profitability statement. We are also learning one more point, which is contribution per unit. Next is contribution per unit. What was contribution in our case? Total contribution is 60,000. Total contribution is 60,000 divided by number of units over this 10,000 dishes. What will be contribution per unit is 6 rupees per dish or per unit. We can also find out contribution per unit by a simple formula: selling price per unit minus variable cost per unit will be is equal to contribution per. Selling price in our case is 10 rupees. Variable cost is 4 rupees. Answer will be 6 rupees per. Now this might seem easy up till this point of time. I am trying to explain you nature of variable cost and fixed cost with an example. Same example we are taking into consideration. Try to understand. I am writing, if we work at a level of 10,000 units that we have taken into consideration. If we work at a level of 20,000 units and if we work at a level of 5,000 units. I am trying to do profitability statement under each and every point. If I sell and manufacture 10,000 Pani Puri dishes, if I manufacture and sell 20,000 Pani Puri dishes, and if I manufacture and sell 5,000 Pani Puri dishes. Let us start with sales. We know selling price per unit is 10 rupees. So total sales will be 1 lakh minus variable cost. What is the total variable cost at 10,000 units? It is 40,000. What is variable cost per unit? 4 rupees. Remaining will be my contribution. What is contribution per unit? 6 rupees. And what will be total contribution is 60,000. Minus fixed cost. What is fixed cost in our case? Fixed cost is 30,000 rupees. It is 30,000 rupees. What will be fixed cost per unit? 3 rupees. How we can find out? 30,000 divided by 10,000 units will be 3 rupees. And my profit will be 30,000. If I am manufacturing 10,000 pani puri and selling 10,000 pani puri, my profit will be 30,000 rupees. And profit per unit will be 3 rupees. I am filling up the point of 20,000 units. If I sell 20,000 Pani Puri units in current year, my selling price is going to remain 10 rupees. So sales is dependent upon production and sales. So 20,000 into 10 will be 2 lakhs rupees. See, total sales will increase, but selling price per unit, unless and until it is given, it will not increase. Variable cost will remain 40,000 rupees. No. Why it will not remain 40,000 rupees? Concentrate. 40,000 rupees variable cost we have decided for 10,000 units. So if you want to manufacture 20,000 units, your variable cost will be double. So variable cost will be 80,000 rupees because you want to manufacture double units, that is 20,000 units. I am finding out per unit 80,000 divided by 20,000. It is 4 rupees. This is 80,000 rupees. What is contribution per unit? 6 rupees. 6 rupees, and this will be 1,20,000. What will be fixed cost? What will be rent of the lorry if you are selling 20,000 units? It will still remain 20,000. What will be rent of tape recorder, utensils and other things? It will remain 10,000. It will not change. They are not dependent upon number of units. So my fixed cost remains same, which is 30,000. And my profit will be 90,000. But I want to find out a fixed cost per unit. Sir, it will remain 3. No, it will not remain 3. Fixed cost per unit will be 30,000 divided by 20,000, which is 1.5. And profit per unit is 4.5. If I am manufacturing and selling 5,000 units, my selling price per unit still remains 10 rupees. I am not changing my selling price. My total cost will be 50,000. But now try to understand, my variable cost will not remain 40,000. Why it will not remain 40,000? Because now I need to manufacture only 5,000 Pani Puri dishes. I will require less potatoes, less water, less chana, and so I will require exactly half. To manufacture 10,000 units, the cost was 40,000. To manufacture 5,000 units, cost will be 20,000. And 20,000 divided by 5,000 is 4 rupees. Let me change the color. It is 4 rupees and 20,000 rupees. My contribution will be 6 rupees per unit, and this will be 30,000. My fixed cost remains the same. It will remain 30,000. What will be fixed cost per unit will change. This is 5,000, 30,000, so it will be 6 rupees. my profit will be 0, profit per unit will be also 0. See why I did this? Because I want to explain you one basic fundamental principle. At whatever level of activity, my variable cost per unit is remaining same. So I am talking about variable cost per unit remains same. But total variable cost total is not remaining same. See this, 40,000, 80,000, 20,000. It increases as production and sales increases, and it decreases as production and sales decreases. So total does not remain same. Fixed cost. See the total fixed cost in all three cases, 30,000, 30,000, 30,000. So total fixed cost is remaining same. But fixed cost per unit, 3, 1.5, 6. Fixed cost per unit is not the same. See, anything which is remaining same is termed as fixed. Anything which is changing is termed as variable. So the name of a fixed cost and variable cost is given from total perspective. So, sir, variable cost remains a fix. Yes, variable cost per unit is always fixed. If you don't change the prices of your raw material, your variable cost per unit remains same. Sir, then it should not be called as fixed cost. No, the name is given from total perspective. Variable cost per unit is same, so it should be fixed, but the name is given from total. Because variable cost does not remain same, it is termed as variable. Fixed cost in total remains same, it is termed as fixed cost. Also, you may note down contribution per unit. I'm not talking about total contribution. Contribution per unit is remaining same. This is idea of variable cost, fixed cost, or contribution. We are going to a new idea, which is PV ratio. It is not PE ratio. In finance, PE ratio means MPS divided by EPS. PV ratio is also termed as a contribution margin ratio. See what is contribution margin ratio. PV ratio is equal to contribution divided by sales multiplied by 100. Multiplied by 100 means I'll be getting answer in percentage terms. Sir, if this ratio is 60%, what does this mean? Try to concentrate what does this mean. If my sales is rupees 100, my contribution is rupees 60 and my variable cost is rupees 40. If my sales is 100, my contribution is 60 and my variable cost is rupees 40. So for every 100 rupees sold, I earn a profit. No, contribution of rupees 60. This is what does contribution margin ratio means. Net profit ratio means, suppose if net profit is 20%, what does it mean? If my sales is 100, my net profit is 20. Here, what does it mean? If sales is 100, my contribution is 60. It is contribution margin ratio. It shows how much is your contribution in relation to your sales, because denominator is sales. Let us find out in our answer contribution margin ratio. What is total contribution? Sir, should I take it from 10,000 units, 20,000 units or 5,000 units? It does not make any difference. Whatever is your forecast, your contribution margin ratio is going to remain same. Let me prove it. Let me take from first 10,000 units. Contribution is 60,000. Sales is 1 lakh. Multiplied by 100 will be 60%. Had I taken from second one, 1,20,000 divided by 2 lakhs multiplied by 100. 1,20,000 divided by 2 lakhs multiplied by 100. This will also come 60,000. So you can take it from any level of activity. What does this mean? My variable cost is 40% of sales. Sales is 100%, then variable cost will be 40% and 60% will be contribution. PV ratio will become a base for solving marginal costing questions. So let us try out each and every method by which we can find out PV ratio. PV ratio can also be found out by contribution per unit divided by selling price per unit multiplied by 100. Let me check in this question whether it is coming correct or not. What is contribution per unit? See, at 10,000, 20,000 or 5,000 level, the contribution per unit is remaining same, which is 6. Selling price per unit is rupees 10. So it is also remaining same. I can take it. Contribution 6, selling price per unit 10 multiplied by 100 is 60%. So even this is the formula for PV ratio. Third one. See what I am finding. Change in contribution. Now you have done financial management leverage. It is not percentage change in contribution. There is difference between percentage change in contribution and change in contribution. Divided by change in sales multiplied by 100. I can also find out contribution per unit. Now, let me take this two, 10,000 units and 20,000 units. I am comparing this two. You can compare any two. My contribution was 60,000. Now my contribution is becoming 1,20,000. So what is the change in contribution is 1,20,000 minus 60,000? Change in contribution in terms of rupees, not in terms of percentage. 60,000 and 120,000. So contribution has increased by 60,000. Sales have increased how much? Sales has increased from 1 lakh to 2 lakhs. So what is change in sales? 1 lakh. 2 lakh minus 1 lakh is 1 lakh. Multiplied by 100, I will be getting still answer of 60%. Let me try out this. Let me compare 20,000 and 5,000. What is change in contribution? What is change in contribution between 20,000 and 5,000? It is decreased by 90,000 rupees. 1,20,000 and 30,000. So it has decreased by 90,000 rupees. PV ratio. change in contribution is minus 90,000. You can write down minus 90,000. No problem. What is change in sales? From 2 lakh, it is becoming 50,000. So change in sales is 1,50,000 multiplied by 100. So 9 divided by 15 multiplied by 100 is nothing but 60%. Sir, how it is important? If we are knowing change in contribution, we will be knowing contribution. Then it is easy to use this formula. Say in some question it will be given only change in contribution. Then you will have to understand by change in contribution and change in sales, you can find out a PV ratio. One more, last. PV ratio can also be found out by this. Change in profit divided by change in sales multiplied by 100. Say I am comparing this to this. Let me compare 10,000 and 20,000. What is change in profit? It was first 30,000. Now it has become 90,000. It has increased by 10,000. So change in profit, it has increased by 10,000. Change in sales, it has increased by 1 lakh rupees. No, it has increased by 60,000. 30,000 and 90,000. This is profit. It has increased by 60,000. What is change in sales? 1 lakh rupees. At 10,000 units, it was 1 lakh. At 20,000 units, it is 2 lakh. So change in sales is 1 lakh rupees. Multiplied by 100 is 60%. See, change in contribution and change in profit in terms of rupees. I am not talking about percentage. Don't confuse it with leverage. Change in percentage and change in rupees is something different. If you will see difference between the 60,000 and 1,20,000, the 60,000 and 1,20,000, 60, 1,20,000. What is the difference? 60. 30 and 90. What is the difference? 60. 1,20,000, 30. What is the difference? Minus 90. 90, 0. What is the difference? Minus 90. So difference change in contribution is equal to change in profit. So instead of change in contribution, I am writing down change in profit. Let me summarize all the formulas for PV ratio. And this will be very much important because each and every questions of marginal costing will deal with PV ratio. What is PV ratio? It shows how much percentage is your contribution in comparison to your sales. What is number one formula? Total contribution divided by sales multiplied by 100. Second one, contribution per unit divided by selling price per unit multiplied by 100. Which is third one? Change in contribution, not percentage change in contribution. Change in contribution as far as rupees is concerned divided by change in sales multiplied by 100. And which is the fourth one? It is change in profit. And this is excellent because change in contribution in terms of rupees will be equal to change in profit in terms of rupees because fixed cost remains same. If fixed cost changes, this will not happen. Change in profit divided by change in sales multiplied by 4 formulas and very important formulas for marginal costing. And so this chart help out to understand variable cost, nature of variable cost. It remain totally it is variable, fixed cost totally it is fixed, but per unit variable cost remains same, per unit fixed cost does not remain same. This chart also helped us out to understand one concept, which is PV ratio, which shows how much is your contribution in percentage terms in comparison to your sales. Let us go to next point, which is segregation between fixed cost and variable cost. Now, practically, this is a puzzle. Let me give you, for a same unit, if the output is 10,000 units and if the output is 20,000 units, total cost is 1,20,000 and here the total cost is 1,80,000. I want you to segregate between variable and fixed. Total cost is 1,20,000. So portion will be variable, portion will be fixed. Here the total cost is 1,80,000. Total will there will be variable, there will be fixed. Total will be 1,80,000. You can take 5 minutes and try out. You need to tell me it is for the same unit. And let me just give you a hint. Fixed cost in both the case will remain same, because fixed cost remains same irrespective of your total output. Let me solve it. Whenever there is a change in total cost, first, what is the change in total cost? 1,80,000 minus 1,20,000 is 60,000. Whenever there is a change in total cost, the change is always because of variable cost. Whenever there is a change in total cost, the change is always because of variable cost. Let me prove it. What is total cost over here? 40 plus 30. That is 70. What is total cost over here? 80 and 30. So it is 1,10,000. What is the difference? 40,000. Believe me, there is a difference of 40,000 because of variable cost. See, fixed cost is remaining same. What is change in variable cost is 40,000. So change in total cost is nothing but change in variable cost. So this is change in total cost will be equal to change in variable cost, because total cost changes. I'm not talking about total cost. I'm talking about change in total cost. Change in total cost is nothing but change in variable cost divided by change in units. What is the change in units? 10,000 to 20,000. That is 10,000 units. Will give me answer of total cost per unit. No, it will give me answer of variable cost per unit. Because my numerator is a change in variable cost. This is a change in output, number of units. Change in variable cost divided by change in number of units will give me nothing but variable cost per unit. So if variable cost per unit, and we have understood variable cost per unit remains same, So variable cost in this case will be 10,000 into 6 will be 60,000. Remaining will be fixed cost. So if total is 1,20,000, variable is 60, fixed cost will be 60,000. Again over here, 20,000 into 6, variable cost will be 1,20,000. Total cost is 1,80,000, variable cost is 1,20,000. So fixed cost is 60,000. Proof that our concept is correct. Fixed cost is remaining same. How to segregate between fixed cost and variable cost? Very easy. Change in total cost divided by change in output will be equal to variable cost per unit. Sir, we need to mug it up? Yes, but do it logically. Why this happens? Because change in total cost is nothing but change in variable cost. Total cost does not changes because of fixed cost, because fixed cost in both the criteria is going to remain same. Let us try out one more question. Output 100 units, 120 units. Total cost it is those are diamonds. So total cost is 700 crores. You can take it 700. Huh? It is 780. Instead of crores, you can take it rupees. It does not matter. You need to tell me what is variable cost and what is fixed cost now. Again, you can take 2 minutes. So how I'll be find out? Change in total cost is 80 rupees. Change in units is 20. 4 rupees per unit. Actually, it is 4 crore rupees per unit is nothing but variable cost. So what will be total variable cost? 100 into 4 will be 400 rupees. 120 into 4 will be 480 rupees. What will be fixed cost then? 700 minus 400, 300. 780 minus 480 will be 300. Fixed cost is remaining same. This is nothing but segregation between fixed cost and variable cost. Alright. Let us go to next concept, and that is the main core concept. That is, this type of questions are even asked in examination. No one will ask you in examination what is contribution per unit. We are going to concept of break even point. In short, it is valid short form. In short, it is also termed as BEP, break even point. Try to concentrate in the same situation of Pani Puri. If someone tells me at what level of activity you will be earning no profit, no loss. At what level of activity? Practically in marginal costing means a level of activity basically means a sales. Now sales can be in units or can be in rupees, but they are asking me this. At what level of activity there will be zero profit, there will be no profit, no loss. Practically means there will be zero profit. How I will find out in my example, in Pani Puri example? We have already got the answer. See, here there is zero profit, right? So what is our break-even point in our example? Pani Puri example, break-even point is 5,000 units. Break-even point in units is 5,000 units. And break-even point in rupee. What is break-even point? What is the sales in rupees at 5,000 units is 50,000 rupees. So break-even point in rupees will be 50,000 rupees. What does this mean? If I exactly sell 5,000 units, or if my total sales is 50,000 rupees, I will be earning zero profit. So 5,000 units or 5 lakhs rupees, sorry, 50,000 rupees is my break-even point. Break-even. At this point, I will be earning zero profit. Now, as an academician, why we want to have a sale of 5,000 units only? We are not earning any profit at 5,000 units. Why we need to have a sales of 50,000 rupees? Then why we are finding out this point? Try to concentrate. This is the sales line. And this is break-even point. 5,000 units or 50,000 rupees. Where this helps me? If my sales per annum will be less than 5,000 rupees, if it will be less than 5,000 units or 50,000 rupees, I will be incurring losses. If I will be earning or if I will be selling more than 5,000 units or 50,000 rupees, I will be having profit. So it is important to find out. Try to understand. I am running this Pani Puri business and my total sales is 7,000 units per annum. What does this mean? I will be earning profits. My total sales is 3,000 units per annum. At the end of the year, I know that I have not crossed my break even, so I will not be earning any profits. So below 5,000 units, I will be earning losses. Over 5,000 units, if I sell, I will be earning profits. Below 5,000 units, I will be incurring losses. And so we find out this. So understand, if someone is starting the business, I ask them, what is your break-even point? They say me 1 crore rupees. Then I tell them that it is not feasible in the small city to have a sales of 1 crore rupees. So what I am telling, that this business will be incurring losses at least in first year if you start the business, because I feel that you will not be able to attain your break-even. This is how the concept of break-even is used. This point is used to decide or to forecast whether you will be earning profit or whether you will be incurring losses. Below break even, you are incurring losses. Above break even, you will be earning profits. This is concept of break even point, but we have not yet understood how to find out. We got it. We were solving some of the question and we got a profit of 0 rupees. But this is not how every time we will be finding out break-even point. Try to concentrate. I am first talking in units, right? I am first talking in units. Break-even point in units. Can I say at break-even point, my profit is 0? How to find out profit? It is the sales minus variable cost minus fixed cost is nothing but profit. We are not talking about contribution. I want profit 0. What will be sales? Can I say sales in units? U is units. Multiplied by selling price per unit. What is variable cost? This is sales. What will be variable cost? Minus sales in units, number of units sold, multiplied by variable cost per unit. This is nothing but variable cost. Number of units sold multiplied by variable cost per unit will be total variable cost, minus fixed cost should be equal to 0. If it is 0, sales units, this is the unit sales at which my profit will be 0. Means that the sales unit is nothing but my break-even point. Fixed cost, I will be taking it on right side. Here, sales per unit or sales in units, not per unit, sales in units, I can take it as common. Sales in units, which is my break-even point. At this level of sales, I will be earning 0 profit. What will be remaining? If I take sales in unit as common, what will be remaining is a selling price per unit minus variable cost per unit. And this fixed cost, I am taking it on right hand side, will be is equal to fixed cost. It is negative going right hand side, that is right hand side of the equation, it will become positive, will be fixed cost. Now we have absolutely understood the sales in units is nothing but break even point. Break even point in units, level of sales at which there is 0 profit. There is a sales unit at which the profit is 0. So break even point in units will be is equal to fixed cost. And as this is multiplication over here, it will become division over here. Selling price per unit minus variable cost per unit. So, break even point in units will be is equal to fixed cost divided by contribution per unit. What is the selling price per unit minus variable cost per unit will be is equal to contribution per unit. So break even point in units is a fixed cost divided by contribution per unit. Let us also check in our question whether the answer is correct or not. Break even point in units, what was our fixed cost in our original question? Fixed cost was 30,000 and contribution per unit was 6 rupees. 30,000 divided by 6 rupees. So 30,000 rupees divided by 6 will be 5,000, and this answer will be in units because it is break even point in units. Was our break even point 5,000? Yes, we directly got it because at 5,000 units we know that the profit is 0. So break even point, we were knowing it, the formula will be correct. Try to understand in other terms also. Let me write down what was our fixed cost. Our fixed cost was 30,000 rupees. Try to concentrate in a logical terms. If I sell one dish of pani puri, what is my contribution? Will be rupees 6. This I have found out. What is this contribution per unit? If I am selling one dish of pani puri, my contribution per unit is 6. What does it mean? By selling one dish, I earn rupees 6, but still fixed cost is to be deducted. Fixed cost is not yet covered because this is contribution and not profit. So by selling one dish, I earn a contribution of 6 rupees. Now, how much rupees I want to cover? Because I don't want to earn any profit. I would like to cover only 30,000 rupees. I don't want to cover anything more. So 30,000 rupees I want to cover. I want to cover rupees 30,000. Why? If I cover more, I will be earning profits. I want the level of sales at which there is no profit, no loss. So I just want to cover fixed cost from my sales. How many dishes I should be selling? What is the answer? 30,000 divided by 6 rupees. What is 30,000? Fixed cost. What is contribution per, what is 6? Contribution per unit. Try to watch, see the formula and understand it. Fixed cost 30,000, I want to cover it. One dish covers a 6 rupees denominator. How many dishes should be sold so that I cover my exactly fixed cost? Variable cost is already covered in contribution per unit. What is contribution per unit? Sales minus variable cost. So variable cost is covered, but fixed cost is yet to be covered. To cover 30,000 rupees fixed cost and per dish is covering 6 rupees, I will have to sell 5,000 dishes to cover my fixed cost on exactly 0 rupees profit. Summarizing the formula, it is break even point in units, fixed cost divided by contribution per unit. Do you all agree with the statement? At break even point, my fixed cost will be is equal to total contribution. At break even point, my fixed cost will be is equal to total contribution. Do you agree or do you not agree? At break even point, my fixed cost will be is equal to total contribution. Then only profit will be 0. Contribution minus fixed cost is nothing but profit. Profit answer is 0 at break even point. So at break even point, my total contribution will be is equal to fixed cost. Let me give you a logical idea last time about break even point. Try to concentrate. This is my sales line in units. What is my fixed cost? Rupees 30,000. If I sell to say 1,000 dishes of pani puri, 1,000 dishes, how much contribution I would be earning? I would be earning contribution of rupees 6,000. If I sell 3,000 dishes of pani puri, I will be earning 18,000 rupees as contribution. If I sell 5,000 dishes of pani puri, I would be earning 30,000 rupees as contribution. And at break even point, my fixed cost and contribution should be same. So this is a level of activity. What is the level of activity? 5,000 dishes is nothing but break even point. Try to concentrate. Now my contribution will increase. If I sell 10,000 dishes, my contribution will be 60,000 rupees. At 10,000 dishes, What is my profit? Total contribution will be 60,000 minus fixed cost is 30,000. So my profit is also 30,000. See, so the name contribution, try to concentrate. What is contribution at this level? 60,000 rupees. Contribution contributes first towards a fixed cost. So what contribution will be doing? It will be trying to cover fixed cost first. Once the fixed cost is covered, it will contribute towards profit. See the name, contribution towards a fixed cost. So first it will start covering fixed cost. What will your contribution do? Contribution will start covering your fixed cost. And then what it will do? It will contribute towards the profit once fixed cost is covered. So at 10,000 dishes, what is your contribution? 60,000. First, it will cover fixed cost. 30,000 is your fixed cost. So remaining contribution of 30,000 is nothing but your profit. Try to understand at 20,000 level even. Suppose your dishes are 20,000. At 20,000 dishes, what will be your contribution? 20,000 into 6. 1,20,000. 1,20,000 minus fixed cost 30,000. And what is your profit is 90,000. See again this chart. What is my contribution? 1,20,000. First, this contribution will cover my fixed cost. What is my fixed cost? 30,000. Remaining will be my profit, which will be 90,000. 30 plus 90 is equal to 120. So I am trying to logically explain you the name. Contribution is a short form. What is contribution? Is contribution towards fixed cost and then towards profit. This is the full name, but we cannot write down this full name every time. So we write down just contribution. It first contributes towards fixed cost and then it contributes towards profit. We are out of our line, but break even point in units will be is equal to fixed cost divided by contribution per. What will be break even point in rupees? As simple as this. Break even point in units. In our example, 5,000 dishes multiplied by selling price per unit. Multiplied by 10. Our dish, Pani Puri dish was having selling price of 10 rupees. 5,000 into 10 rupees is 50,000 rupees. So break even point in rupees is very simple. Break even point in units multiplied by selling price per unit. What is break even point in units? It is the fixed cost divided by contribution per unit multiplied by selling price per unit will be nothing but break even point in rupees. I am taking this on this side. It is a fixed cost multiplied by selling price per unit upon contribution per unit. Contribution per unit, I am just taking it on right hand side. Can I write down? It is fixed cost. If I want to convert this multiplication into division, what does mathematics says? If you want to convert multiplication into division, you will have to do reciprocal. Means contribution per unit will come in numerator now. Contribution per unit divided by selling price per unit. What is this? Contribution per unit divided by selling price per unit multiplied by 100. We don't consider multiplied by 100. What is contribution per unit divided by selling price per unit? PV ratio. Contribution per unit divided by selling price per unit. Is it PV ratio? Yes. So instead of contribution per unit divided by selling price per unit, I am writing fixed cost divided by PV ratio. And now I am writing it properly. It is break even point in rupees is fixed cost divided by PV ratio. So I can use this formula. I can use this formula to find out break even point in rupees. This is break even point in rupees, the two formulas. By both the formula, I want to verify whether my answer will be correct or not. In my question, let me write it down over here. What was selling price per dish? Was a 10. Variable cost per dish was a 4. And fixed cost was rupees 30,000. PV ratio was 60%. This we know. Let me find out by this formula. What is our answer? Break even point in rupees. In our example, break even point in rupees was 50,000 rupees. Rupees 50,000. That we know, right? In one of our answer, the profit was coming 0 and break even point was 50,000 rupees. Let us verify by this formula we are getting 50,000 or not. What is break even point in units? That we have found out 5,000 units. We have done over here, and numbers of times we have done. This is also the same. So it is 5,000 units. What is the selling price per dish? 10 rupees 50,000. So the formula seems to be correct. Let us try out over by this formula also. Fixed cost divided by PV ratio. What is fixed cost? 30,000 divided by PV ratio divided by 0.60. You can even do divided by 60%. It is 30,000 divided by 0.60. What is the answer? Rupees 50,000. So I can find out break even point in units by fixed cost upon contribution per unit and break even point in rupees by fixed cost upon PV ratio. Yes, for rupees I can also find out break even point in units multiplied by selling price per unit. So alternate formula is break even point in units multiplied by selling price per unit will also give me break even point in. But try to always compare this. Whenever it is break even point in units, what is divided is contribution per unit, and whenever it is break even point in rupees, what is divided is a PV ratio. Sir, if we are having break even point in units, isn't this a easy formula? Yes, but sometimes all the figures will be given in rupees. You will not be able to find out anything in rupees. You will have to have knowledge of this formula to get the answer. I hope all the formulas are logically even clear to you. We have derived each and every formula and then written it. We are not just mugging up the formulas. We are even trying to understand the formula. This is a summary of break even point. What is break even point? It is unit sold or rupees sales at which there is no profit or no loss. Why we need to find out break even point? Because below that level of activity you will be incurring losses. Above that level of activity you will be having gains, that is profits. Let us continue with next concept. What is next concept is sales in units or in rupees. See, first our idea was to get a sales at which there is no profit, no loss. But now I want some profit. For getting desired profit. So let me write down the same financials for our Pani Puri business. Selling price at 10 rupees per dish. Variable cost 4 rupees per dish. Contribution is 6 rupees per dish. And fixed cost is rupees 30,000. Now if someone tells me find out the level of activity where there is no profit, no loss, they are asking me break even point. But see what they are asking. Find out level of sales or sales. Sales at which there will be profit of rupees 90,000. Find out the sales at which there will be a profit, not a contribution. There will be a profit of rupees 90,000. So I'm asking them whether you want sales in units or in rupees. They want in units. So they are telling me how many dishes of Pani Puri should they sell or should I sell to earn a profit of rupees 90,000. Now how it can be find out, try to understand. Whenever it is units, sales for a desired profit in units, I'm writing left hand side this, right? Sales for desired profit in terms of units will be is equal to contribution per unit. In denominator, I am writing contribution per unit. What is contribution per unit in this case? 6 rupees. I earn contribution rupees 6 per dish. What I want to cover, contribution covers something, right? We have learned this. Contribution first covers the fixed cost and then it covers the profit. So how much I want to cover? First I want to cover a fixed cost of 30,000. And then I want to cover 90,000 rupees profit. So I want a total contribution of 1,20,000, right? 90,000 profit and 30,000 fixed cost is a total contribution of 1,20,000. Total contribution 1,20,000. Total contribution minus fixed cost 30,000. Then my profit will be 90,000. So my desired contribution is 1,20,000. Contribution covers fixed cost and then profit. What is 30,000? Fixed cost. What is 90,000? Desired profit. I will be getting answer of sales in units at which my profit will be 90,000. Let me try it out. Fixed cost 30 plus 90 is 1,20,000. Divided by 6 rupees will be 20,000 units, that is dishes. At 20,000 units, my profit will be 90,000 rupees. Let me prove it. We have already proved it somewhere before, but let us prove it again. If my sales is 20,000 units, selling price is 10, so sales will be 2 lakhs rupees. Minus variable cost is rupees 4, so 20,000 into 4 is 80,000 rupees. So my contribution will be 1,20,000 rupees. Minus fixed cost will be 30,000 rupees. And so my profit is 90,000 rupees. So this is the answer. 20,000 units is a sales at which I will be earning a profit of 90,000 rupees. Once again, try to understand how we have found out. We wanted a contribution of 1,20,000. Why I want a contribution of 1,20,000? Then only my fixed cost is 30,000, so my profit will be 90,000. If I want a profit of 0, my fixed cost is going to remain 30,000, and so my contribution should be 30,000. So at break-even point, I wanted a contribution which is equal to fixed cost, which is 30,000 in this case. But if I want a profit of 90,000, now I will need total contribution of 1,20,000. How much a total contribution I want? 1,20,000. One dish gives me how much contribution? 6 rupees. So how much dishes will give me a total contribution of 1,20,000? That is 1,20,000 divided by 6. What is 1,20,000? It is fixed cost plus desired profit. And what is a 6 is contribution per unit. And so this gives me answer of desired profit. It is brother of break-even point. Break-even point, my desired profit is 0. And at a desired profit, my desired profit will be normally some positive answers. Now, if someone tells me, find out the sales in rupees at which there will be profit of rupees 90,000. Now we can easily do this, right? Our profit at 90,000 was at 20,000 units multiplied by 10. That is this. At 2 lakhs rupees sales, my profit will be 90,000. But how to find it out? Very easy. Sales for desired profit in units. Multiplied by selling price per unit will be is equal to sales for desired profit in rupees. Let me find out in our case. Sales at desired profit in units was 20,000 units. What is selling price per unit? 10, which will be rupees 2 lakhs. What is the 2 lakhs rupees? If my sales is rupees 2 lakhs, my profit will be as per my desire, that is rupees 90,000. That we have already proved over here. If the sales is 2 lakhs, my profit is 90,000. But this desired profit sales in rupees, sales for desired profit in rupees can be found out by different formula also. Fixed cost plus desired profit upon PV ratio. We are not deriving the formula, but it can be same way derived as we have derived this. It will be same. Believe me, break-even point is also desired profit question only. Break-even point, my desired profit is 0. It will be just added in numerator. Whatever is my desired profit will be just added in numerator. So fixed cost plus desired profit upon PV ratio. Let us find it out in our case. Fixed cost is 30,000. My desired profit is 90,000. And in our Pani Puri case, PV ratio is 60%. 1,20,000 divided by 0.60 will be rupees. Once again, try to understand the concept. At 2 lakhs rupees sales, my profit will be 90,000. Now, why you want a profit of 90,000? You might want to do this business only if you earn a profit of 90,000. So you want to find out how much sales I should be doing so that my profit is 90,000. And we have also understood the logic behind it. So what we have done, break-even point. Then we also understood the concept of desired profit. In break-even point, my desired profit will be 0. Now let us understand a new concept, which is margin of safety. Is also termed as MOS. I will be taking my base example same so that it becomes easy for understanding. My selling price per dish is ₹10. Variable cost per dish is ₹4. Contribution per dish is ₹6. PV ratio is 60 or 60%, and my fixed cost is ₹30,000. I also know my break-even point, right? Break-even point in units is 5,000 units. Sir, it is not 20,000. No, 20,000 is desired profit. And break-even point in rupees, also I am knowing this, it is ₹50,000. 5,000 into 10. Also I have found out n numbers of time. Now try to concentrate. My actual sales. My actual sales is 5,000 units. No, actual sales is not 5,000 units. This is just a figure which I have found out, that at 5,000 units there will be no profit, no loss. Then what is my actual sales? Is 7,000 dishes. So I have found out my break-even point. My break-even point was 5,000 units. I started my business, and in 1 year I actually sold 7,000 units. Can you tell me, we will be having profits or we will be having losses? How much profit is not important or how much loss is not important? We'll be having profit or loss? Profit? Alright. We will be having profit. What is the reason? Because we are selling more than break-even point. We will be having profits and will not be incurring losses. So my actual sales is 7,000 dishes. Try to understand. Once again, I am drawing number line for the sales. This is 0. This is infinite. This is a sales in units. What was my break-even point? 5,000 units. What I am actually selling is 7,000 units. Then this is nothing but my margin of safety. See, below 5,000 units, I was going to incur losses. I have not sold 5,000 units. I have sold 7,000 units. Then 2,000 units is my margin for safety. If my sales decreases by more 1,000, I will not be happy, but I will not be incurring losses. If my sales decrease by 2,000 units, I will again not be happy, but I will not be incurring any profit, any losses. But if my sales go down beyond that 2000 unit mark, then I will start incurring losses. So my margin of safety will be 2000 units. Margin of safety is 2000 units. See, it is like this. This is the road. I am walking over here. There is a truck passing from here. What is the distance between me and truck is 2 centimeters. What is the loss? Accident. What is margin of safety? 2 centimeters. That's all right. Where I am right now, 7,000 units. When I will be having an accident, if I go below 5,000 units, that is my loss. So what is margin of safety is 2000 units. Between break-even point in units, actual sales. I am converting it into formula. Margin of safety in units will be is equal to actual sales in units minus break-even point in units. Actual sales minus break-even point is nothing but margin of safety. And this is very easy to understand, right? 7,000 units sold, 5,000 units below 5,000 we are going to have loss. So 2,000 is margin of safety. Margin of safety is also calculated sometimes in percentage. So margin of safety in percentage is margin of safety divided by sales multiplied by 100. And the sales is actual sales. So what is margin of safety? 2000 units upon actual sales is 7000 units multiplied by 100. Margin of safety in percentage will be 2 divided by 7 multiplied by 100. That is 28.57%. Sir, what does this mean? Percentage MOS. What does this mean is my sales right now is 7,000 units. If it decreases by 10%, that is by 700 units, I will be still having profits. If it decreases by 20%, I will be still having profits. If it decreases by 25%, I will be still having profits. If it decreases exactly 28.57%, I will be having break even. That is no profit, no loss. If it exactly decreases by 28.57%, I will be having no profit, no loss. Beyond that, if my sales decreases by 30%, I will start incurring losses. Let me find out. 7,000 minus 28.57%. It is 5,000 units. 5,000 is my break-even point. So if my sales decreases exactly by 28.57%, I will be incurring no profit, no loss. Beyond that percentage, more than 28.57%, I will start incurring losses. If my sales decreases by 20%, I will not be still incurring losses. This is margin of safety in percentage. I am doing on same page margin of safety in rupees on the same page with different color pen. My actual sales in rupees will be 7,000 into 10 because my one dish is selling at 10 rupees. It will be rupees 70,000. My number line is in rupees. What is my break even point in rupees? 50,000 rupees. What will be my actual sales in rupees? 70,000 rupees. What will be my margin of safety in rupees? 20,000 rupees. 70,000 minus 50,000, or you can even do 2,000 into 10. So margin of safety in rupees will be is equal to actual sales in rupees minus MOS in rupees. Everything will be converted into rupees. And my percentage answer will remain same. Margin of safety in percentage will be same thing. It will be, instead of 2,000 units, it will be 20,000 rupees, which is my margin of safety, upon total sales in rupees, which is 7 lakh, multiplied by 100. I will be getting same answer. So if you want to find out in percentage terms, it is margin of safety divided by actual sales into 100. If you take units in numerator, you take units in denominator. If you take rupees in numerator, you take rupees in denominator. Let me just summarize on a new page. MOS. In rupees, in units. MOS in rupees will be sales in rupees minus break even point in rupees. MOS in units will be sales in units minus break even point in units. And MOS in percentage is MOS either in units or in rupees divided by actual sales. If you have taken numerator rupees, numerator units, denominator units, multiplied by. So you are having margin of safety. Suppose this answer is 10%. If your sales goes down beyond this 10%, you will start incurring losses. Let us understand something interesting from margin of safety. Again, I am taking the same example which we have taken. Our break even point is 5,000 units or 50,000 rupees. Our actual sales is 7,000 units or 70,000 rupees. Our selling price is 10, variable cost is 4, contribution per unit is 6, PV ratio is 60%, and fixed cost is 30,000. We have also understood our margin of safety. Margin of safety is 2,000 units or 20,000 rupees. Try to understand first point. What will be my answer if I do? This is my break even point, right? Break even point in units multiplied by contribution per unit. What will be my answer? Break even point in units multiplied by contribution per unit. It will be total contribution at break even point, which will be nothing but fixed cost. It is total contribution at break even point, and at break even point, total contribution is equal to fixed cost. Break even point in units multiplied by contribution per unit. What is break even point in units? 5,000 units multiplied by contribution is 6. This is 30,000 rupees, which is nothing but fixed cost. One more. Break even point in units multiplied by, break even point in rupees multiplied by PV ratio will be also fixed cost. It is just the game of rupees and contribution per unit, right? This is units, this is rupees. Whenever there is rupees, PV ratio will be in picture. Whenever there is units, it will be contribution per unit. Break even point in rupees is 50,000. Multiplied by PV ratio is 60%. This is 30,000 rupees, which is my fixed cost. See, I'm just going here to here. Ultimately, you feel it is a different type of formula. What is break even point in units? It is fixed cost divided by contribution per unit, right? Contribution per unit going on left hand side. Break even point in units multiplied by contribution per unit is equal to fixed cost. This is what I have written over here. Same way, what is break even point in rupees? It is a fixed cost divided by PV ratio. PV ratio coming on left side is nothing but this formula, right? Break even point in rupees multiplied by PV ratio is nothing but fixed cost. So it is one and the same formula. It is break even point formula. It is nothing else. All right. Then can anyone answer me what will be this idea? Actual sales in units. Now understand, whenever there will be units, I will multiply, divide contribution per unit. Actual sales multiplied by contribution per unit. What will be the answer? Actual sales multiplied by contribution per unit will be nothing but total contribution. Actual sales multiplied by contribution per unit will be total contribution. You can find out 7,000 into 6. It is how much? 42,000. 42,000 minus 30,000. It will be 42,000 is total contribution. Let me find out actual sales. If sales is 70,000 rupees, variable cost will be 28,000. Total contribution will be 42,000 minus a fixed cost 30,000. Profit will be 12,000. So our actual profit is 12,000 because 70,000 rupees is actual sales. Total profit is 12,000. Total contribution is 40,000. Let me verify whether this is the correct answer or not. Actual sales is 7,000 units multiplied by 6 will be 42,000, which is nothing but total contribution. Actual sales multiplied by PV ratio This actual sales is in rupees. Are you getting an idea? When I take it in rupees, I take per rupee what is the contribution, which is nothing but PV ratio. Will be also total contribution. Actual sales is 70,000 rupees multiplied by 0.60 will be 42,000. Now I am trying to go to main idea. Try to concentrate. If I do this level multiplied by contribution or PV ratio, if it is in units, contribution per unit, if it is rupees, PV ratio, then I get fixed cost. See, what is this? Break even point. I told you, till the time break even point is achieved, your contribution is covering your fixed cost. Once the fixed cost is covered, it will be covering your profit. Try to concentrate. What now I am finding out? Margin of sales in units multiplied by contribution per unit. What will be answer? Neither it will be fixed cost, neither it will be total contribution. The answer directly I will be getting is profit. Let me find out in our case whether the answer is coming or not. Margin of safety in units. So 2000 units multiplied by 7 so contribution per unit is rupees 6. This will be 12,000 rupees. Why 12,000 rupees? Neither I am taking total sales, neither I am taking break even point. I am taking difference between total sales and break even point. Difference between total sales and break even point means your fixed cost is already covered. So contribution in margin of safety is nothing but profit. Try to understand. My contribution is covering my fixed cost and then it is covering my profit. So if someone tells me that how much this 2000 units are earning contribution, 2000 units are earning a additional contribution over and above fixed cost of rupees 12,000, which is nothing but my profit. It is earning 12,000 rupees contribution over and above my fixed cost. So fixed cost is already covered in that 5,000 units. Additional 2,000 units is covering my profit. So ultimately additional units multiplied by contribution per unit will be nothing but profit. And in similar manner, MOS in rupees multiplied by PV ratio will be also equal to profit. Let me verify whether my answer is correct or not. MOS in rupees is 20,000 rupees multiplied by PV ratio is 60, which is nothing but 12,000, which is nothing but my profit. And this will be helpful to us. Even this is helpful to us. This is covering fixed cost of 30,000 and this portion is covering an additional amount of 12,000. So 7,000 units is covering totally 30,000 plus 12,000, that is 42,000. 30,000 contribution will be covered in fixed cost and remaining 12,000 will be your profit. So if you just do MOS multiplied by contribution per unit or PV ratio, you get answer of profit. Let me just summarize it. MOS in units multiplied by contribution per unit is nothing but profit. See, visualize every time number line in the mind. Break even point into contribution per unit is nothing but fixed cost. MOS multiplied by contribution per unit is profit. And total sales multiplied by contribution per unit is nothing but total contribution. So MOS in units, let me also write down this. Break even point in units multiplied by contribution per unit will be your fixed cost. And total sales in units multiplied by contribution per unit will be fixed cost plus profit, and fixed cost plus profit is total contribution. Total sales is nothing but break even point plus margin of safety. This is nothing but break even point plus margin of safety. So multiplied by contribution per unit will be fixed cost plus profit. If it is in rupees, then MOS in rupees multiplied by PV ratio will be profit. Break even point in rupees, whenever it is rupees, you need to multiply PV ratio. Something which is units can be multiplied with contribution per unit. Something which is rupees should be multiplied with percentage, will be fixed cost. And actual sales in rupees multiplied by PV ratio is nothing but fixed cost plus profit, which is nothing but total contribution.